Hey, this is Nick from Income Digs. Welcome to this video tutorial. Today we are going into QuickBooks and we're going to talk about a couple issues that have been coming up a lot as we're getting into the details of managing our rental or our investment business in QuickBooks. And those two things are how to deal with personal expenses. So those are expenses that you pay for with your personal card, but those should be business expenses. How do we deal with those in QuickBooks, right? And we're also going to talk about how we deal with having multiple businesses and potentially like using the wrong card from one business to the other. How do we keep things organized and balanced in QuickBooks? And these are kind of detailed, more complex things that happen, but they're going to happen in your business, okay? So let's talk about the first one. That's personal expenses. So the idea is we formed an LLC, or even if it's a DBA, but we have our separate bank accounts for that, right? Our S Corp, our LLC, our DBA, whatever. We are treating it separately. We are hopefully setting up bank accounts and credit cards for that business, and I suggest that you do so. However, every so often, we're going to incur personal expenses that should actually be for the business. For example, you're out and about and you're at Lowe's and you need to buy some lumber for the framing project you have going on at one of your rental properties. You don't have your business credit card on you. You swipe your personal one. So now what do, right? Now, going into QuickBooks here, you could, and I do not suggest this, you could link up your personal credit cards and bank accounts to your banking feed and put them into QuickBooks. I do not recommend you do that. QuickBooks should be for business, okay? Now, when I say that, if you have a DBA that is on your social security number, that's okay. You can still call it personal business in here, but you should be setting up separate cards and credit cards specifically for that, okay? So what happens when you make that purchase on kind of the wrong credit card, right? So I'm going to go to a profit and loss for next year. So here are a few ways that you can do that. Now, when you go to add an expense, you want it to be in your books, right? Now, it's not going to automatically feed in there because I don't want you to connect your bank account, okay? I don't think that that's a good idea. So if you go to do an expense, this sounds like it'll work, but the problem with this is that I can't pick out my personal bank account. All right, now I'm going to address that. There is a way that we can deal with it. It's my second favorite way to do it. My favorite way to deal with this is to use a journal entry. And there's two reasons for this. For one, the journal entry approach means I don't need to add any kind of phantom accounts. And two, journal entries, as you probably know, kind of take longer and they're a little bit more tedious to do. I want to encourage you to not have to do many of them, right? And so I'm trying to encourage you and your business to stop spending as much on your personal card for business expenses. Try really hard to have everything be self-contained into the accounts you have in QuickBooks. But let me show you how to do it. So look at this here. I have a blank profit and loss for the year. Let's say that I spent $45 on framing materials for a rental property or something like that, right? Maybe it's repair. Go ahead and create a journal entry as of the date of that transaction. So let's just do 2/21. I'm going to do it in 2021 so that it shows up the right place. Okay. So what is the expense account? So let's just say it's repairs and maintenance for our rental property. Let's say it's $45.50. Okay. And this is going to be like missed toilet repair. Okay. And you can maybe put it toward a class. Okay, so now what's the account here? Now I could use a checking account, but my personal checking account's not in there. Same with a credit card. I don't have my credit card in there. So all you need to do with this is you should have an equity account called Owner's Pay and Personal Expenses. Okay, right here. And QuickBooks actually gives you this one by default. So if you choose to keep it, great. If not, you could even put it into owner's contributions and distributions. It kind of works the same, but if you want to treat that a little bit separately, go ahead and use this owner's pay and personal expenses, and you can put it in there. And the cool thing about this is now, this will show up on my P&L, which is what I wanted. And it doesn't impact all those business credit cards and bank accounts that I have because I didn't use them, all right? So that's one way to do it. The other way to do it, which is still a good way, but it's kind of my second favorite way to do it, is to create an account, a checking account or a credit card account, or both, for your personal cards. Now, I'm not telling you to link them. That is not what we want to do, and we're actually never going to have the balance. We don't want the balance to be higher than zero. So let me tell you what I mean by that. So let's add that card. Now I'm going to do it right within a transaction, okay? So I'm going to click an expense, and actually, I don't even know if it'll let me. Let's see. Yeah, it will. Okay, so let's do personal credit card. Okay, I'm going to create that new account, and it's going to be a credit card. Okay, there it is. All right, and I'm going to do, again, repairs. And this one's going to be for paint, and it's going to be 125, whatever. Okay, let's go ahead and do that. All right, so I'm paying with my personal credit card. All right, so again, this will populate onto my P&L, which is exactly what I need it to do. But now we have to take a look at our balance sheet, and this will go for both of what we just did. So if I look at my balance sheet here, and again, this is for 2021, just to kind of forward things up here. All right. Okay, so if we go down, we notice that that I have $100.25 on my personal credit card. Okay, that makes sense because I just spent money on that, right? And then I also have this owner's pay and personal expenses of $45.50. All right, so one thing you can do with these is now you can use journals to kind of empty them out. Okay, so what do I mean by empty them out? Well, if we're giving ourselves draws, for example, right, we could transfer this from our owner's pay to our draws, or we might not care, that's fine, but we probably care about this. My advice to you would be to, within your business, have some kind of cadence so that every month, every quarter, certainly every year, you're taking everything that you spend on your personal card and you're doing a journal entry to eliminate it from your balance sheet and bring it into equity. And I'm going to do that right now. All right, so I'm going to make a journal entry as of the end of, let's say, February for this example, for $100.25 to get it out of my personal credit card. And all we're doing is we're saying, we used my personal card for something, okay? And so we're almost treating that as if I personally invested into the business, okay? So we're going to reduce it by 125, and then I'm going to do, again, owner's pay and personal expenses, or if you wanted to, you could do the contributions and distributions. They're all the same, as far as how they act on your balance sheet. It's just a matter of if you want to see it separate or not. I'm going to put it right here, okay? And then I can save and close that. I don't need a class for this right now. Okay, and you see that my personal credit card zeroed out, which is exactly how I want it to look. And then my owner's pay and personal expenses has increased to $145.75. Okay, and if we drill down into that, we see that, okay, we spent some money on those things. So here's where it boils down to it. If you're fine using journal entries, you have no need to add that personal credit card to your balance sheet. But if you want to be doing quick expenses like that, then you're going to need it there, but you need to balance it out at the end of the year, okay? So that is my advice on using QuickBooks to manage personal expenses that were used for your business, all right? The next topic I want to go over with you is different businesses and using different cards for each, okay? So if I look at my balance sheet for next year, you could potentially, if you're using location tracking or business tracking, you might be drawing up a balance sheet with businesses across the top. And mine kind of looks a little bit uglier than I'd like because a lot of things I'm not tracking the right way, but we're going to try to hone in on a few specific things. So I have two businesses in QuickBooks right now, 34 Long LLC and ID Property Management. So what I want to demonstrate for you is, let's say that ID Property Management is used to pay for something for 34 Long LLC, okay? For example, let's say that I am paying for maybe a subcontractor, right? So let's just do I have a tile? Yeah, sure. Okay, and let's say that I am using 34 Long checking, okay, and I'm doing tiles subcontract. Now notice I'm using item details here, which is products and services. Doesn't really matter for this example. And let's say that I paid $452. Okay, class goes to 34 Long, sure. All right, let's go ahead and do that. But for the, let's say that this is, here's what I want to do. I want to use the 34 Long checking account, but the class is something else. Let's say that it's 264 Union, and it's paid for, 264 Union is owned by ID Property Management. Okay, so here we have some conflicting stuff going on. I want to show you what happens with that. So if I do that transaction and I look at my balance sheet, again displaying my businesses across the top, you'll notice that my 34 long checking, the total is probably accurate. However, now I have a negative balance in here for ID Property Management. Okay, so what do you do with that? How do you get it back to 34 long? All right, so the way that I deal with this in my business is something called intercompany loans. So we kind of pretend that that $452 that was spent for an ID Property Management business was actually like loaned to the business from 34 Long LLC. Okay, this is again pretty complicated, and I'm going to recommend that you talk this concept and this strategy through with your CPA and accountant, make sure they're okay with it. But the way I'm going to get this amount out of my balance sheet, because this does not look right, I want it to go over here. I want this total to be 548. How do I do that? I'm going to be using intercompany loans. Okay, so what I'm going to do right now is set up intercompany loans, and all within one journal entry. I'm going to click this, move it over here so I can kind of reference it. And let's go back to my balance sheet for next year. Let's display our businesses, and I'm actually going to save it. Okay, and I'm going to do a journal entry. Now, the first thing I have to do is on that 34 long checking account, okay, I need to reduce the amount for one business and increase the amount for the other business. All right, let me see if I can bring that over. Okay, so what I mean by that is 34 long checking, I'm going to have two line items here. I'm going to have one for ID Property Management. I'm going to have one for 34 Long LLC. Okay, and what do I need to do here? For ID Property Management, the balance is currently negative 552. I need to increase it, I'm sorry, by 452. Okay, and I need to decrease the other one. Okay, this will get it off the balance sheet. So I could just do this and be done, but here's where the problem lies. If I do this and pretend I'm done, right? All right, so that worked out great, but here's the problem. If I do assets equaling liabilities and equity, notice that they're not equal per company. All right, this is where I've gotten into trouble way in the past before I came up with this intercompany loans idea. If you give this to your accountant, they're going to say, no way, this business, the balance sheet, assets must equal liabilities and equity, and that's currently not the case. You messed up somewhere, all right, and you're going to be killing yourself trying to figure this out. Okay, so what you need to do is on that same transaction that I just did, is we need to use intercompany loans. Okay, so what are intercompany loans? So in this case, 34 Long LLC is actually loaned money to ID Property Management. So I'm going to do two intercompany loan accounts, one as an asset for 34 Long LLC and one as a liability for ID Property Management. So I'm going to do intercompany loans, 34 Long LLC to ID Prop Management. Okay, and I'm going to create this. This is actually going to be, because it's going out, it's two, it's actually going to be notes receivable, so I'm going to call that other assets, and we can do other current assets, loans to others, sure. Okay, I'm going to do that. And so this one is for 34 Long LLC. And then we have our intercompany loans. On the other side, we have ID Prop Management from 34 Long LLC. All right, now this is a liability. All right, so we can say loan payable. All right, and this is for ID Property Management. Okay, and all we're going to do is we're going to increase the amount of this loan by the amount of this transaction. So in effect, what we're doing is we're saying that we used the wrong card, right? We made the mistake. So that was almost like, in effect, 34 Long LLC is loaning ID Property Management this money, okay? And so if I were to save and close that, It won't impact my transaction up here. That still is correct. I need to get my arrows back here. But what it does is it adds an asset to the one business, a liability to the other. These can be negative too, by the way. So if you're thinking about like, I'm not sure which direction to do it, it's okay if they are negative. So here we have an asset for 34 Long LLC, 452. And then on ID Property Management, we have a 452 as well. Now, hopefully, let's see what happens here. Yep. So now my assets and my liabilities equal each other by business. Okay, so everything's working out perfectly and it looks good and everything's where it needs to be. Now here, you're probably looking at this and you're saying like, what the heck's going on with this 34 Long LLC, ID Property Management, this checking? We would use the same kind of journal account for that. Okay, so intercompany loans are a way to make sure your balance sheet is still in check, but it helps you alleviate the instances when you're using the wrong card for each. So both scenarios here, when you're using your personal card for business expenses, or when you're using the wrong business card for the wrong business expense, there are ways to fix it within QuickBooks without going crazy. I suggest you try to limit how many of those transactions happen. It's a lot easier, it's a lot cleaner if you're using the right cards and the right checks for the right business. But if you need to clean it up, here are some strategies to do it. All right. So again, a little bit more of a complex topic today. If you have any questions or specific questions, nuances, scenarios that you want me to go over, go ahead and throw them in the comments here or email me directly and we can cover them in a follow-up video. I know that this is really confusing stuff, but it's real life, right? We make mistakes or it just makes sense to use this card, we get more points, whatever that the case might be. There's always a way to deal with it as long as you, your accountant, your CPA are in line with it. All right. Thanks so much for your attention on this video. Feel free to check out all of the free resources we have available at incomedigs.com. Also, we have Real Estate Accounting Bootcamp is up and running. We're getting super good feedback from everybody who is in the course. We are relaunching it again, even though you can get in right now, but we're kind of relaunching it in the spring of 2020 as well. If you're interested in that, certainly sign up to be on our newsletter because we're going to be having a lot of cool information and discounts and promos going on for that. All right, I'll see you on the next video.